Good morning. We'll go ahead and get started, and excited to welcome you to our webinar on insurance basics for nonprofits. And I would like to welcome our guest today, Michelle Hooper with Illinois Select Risk. So we have some time for Q&A, and we will be, you can enter questions in the Q&A box at the bottom of your screen. You can also send a message directly to us if that works better for you. And we just ask that your questions stay on the general level and not super specific. If you have a super specific question, please follow up with Michelle directly afterward. And we are recording the session, and we're going to make this available on our YouTube page, so you'll be able to see it there. A little reminder about our core values at the Simmons Center for Global Chicago. All right, and with that, I will turn it over to Michelle.
Good morning, everyone. I am going to talk with you a little bit today about Insurance 101, and this is going to be a very broad brush, and then we're going to talk a little bit about specifics relating to not-for-profits. I'm going to get my screen shared here. All right. So, hope is not a business strategy, and as silly as this seems to say, and as obvious as this seems to say, a lot of not-for-profits in their infancy tend to just hope that everything is going to go well because they're not doing anything controversial, they're doing good works, what could possibly go wrong, and can someone really sue us, or would someone really sue us? The reality is that any organization can be sued by anybody for anything at any time. But this bottom sentence here is really what's truly important. Insurance is also about the cost to defend you. If ever there was a time when a claim would ever escalate to a court of law, and even if your organization were to be found not guilty of doing anything wrong, you would still need money to defend you. And insurance is about defending you as well. So Insurance 101, coverage doesn't come in one neat policy. Many times I hear people say, oh, just give me the umbrella policy. Well, that isn't really something that you can just get. Coverage comes in silos. We have property, crime, and liability, directors and officers, which is also coupled with employment practices, workers' compensation, data breach or cyber breach, and international coverages. And there's a lot of things that are involved in terms of getting insurance quoted. Applications, they want signatures on forms, they want financials. Carriers need to know things before they quote. So where is a good place to start? Your board of directors and senior management are going to be able to speak with their staff about what kind of deductible can be managed, what kind of cash flow do you have? And one of the most common questions I get is, well, if we double our deductible, does that mean our premium is going to be half price? No, it's not going to be. And that is very dependent too on the type of coverage. But what also are your personalities of your senior management? Are you risk takers or are you risk averse? What kind of loss control measures do you have in place? By not purchasing high limits on insurance, that should mean that you've got very good controls in place to prevent any type of potential claim. Also, external forces. If you have a landlord, a lot of times they're going to tell you what kind of coverage they want you to have on your space. If you are getting funding, your grantors are going to specify what kind of coverage and what kind of deductibles that they consider acceptable. So you need to really take a look at what is in your policy and ask your agent to review your contract before you sign anything. Small, quick example. I had a client who was in the Chicago Loop area and was moving into a new location, and they signed a lease. And the lease said that they had to have $5 million of excess coverage above and beyond the basic limits. They didn't need that. They were a 10-person office. They didn't have foot traffic coming in. And that landlord I was able to talk with that landlord, talk him out of requiring that limit. But I had another client whose landlord said, I'm sorry, you signed it, you must buy that coverage. And that was a $5,000 expense hit that they didn't need to spend. So ask your agent before you sign anything. So how many quotes should you get? If you are a smaller organization and your budget's below $2 million, there's not going to be large pricing differences, except when there is a substantial difference in the coverage. And cheapest is not always the best. There are agents out there who specialize in not-for-profits and have relationships with insurance carriers that specialize in not-for-profits. There are agents out there that are generalists who will do a Jiffy Lube one day, a nail salon the other day, maybe a library. So cheapest coverage is not always the best. What's really important is that you align yourself with an agent who really understands not-for-profits. The third point here, the whistles and bells coverage. This is also called broadening endorsements. And every carrier has a different name. It's called Signature or Elite or Platinum or Extra Protector. But this typically is where a lot of claims that are small fall, not the big general liability or abuse or professional liability. So what that means is that the whistles and bells or broadening endorsement coverages makes apples to apples comparison virtually impossible. You have Macintosh and Gala, or you have John and Golden Cortland. They're still apples, but they're different. There's a different profile for them. So you really need to not overwhelm yourself with a lot of quotes if you're a smaller organization. So how much should insurance cost? Well, that's very dependent upon what you do. Your scope of services is going to help dictate what your pricing is going to be. It's also your contractual obligations. How high of limits are required by third parties? Your own internal risk management. If you're a very buttoned down organization and you have lots of things in writing, policy procedures and checks and balances, that's going to be helpful. And geography, oddly enough. If you are in the city of Chicago, your professional liability coverage is going to be much more expensive than someone who is in a rural area. And that has to do with jury awards, nuclear verdicts. That's a term you may have heard in the news recently. So geography sometimes is going to dictate the pricing. But no matter what your insurance costs, it's cheaper than losing everything. If you were to not be insured for a certain type of risk, you're going to have out-of-pocket expenses to defend yourself, to defend your agency, to defend your employees, maybe even your volunteers. And more than 50% of not-for-profits close after an uncovered claim. So one of the things I hear a lot is, well, if I don't want the umbrella policy, I want the all-risk policy. And all risk is a term that you will often hear in insurance, are also called special cause of loss. And all this means is all risk is the broadest coverage you can buy. However, every policy of insurance, no matter what the coverage, has significant exclusions. In fact, if you ever get bored and need something to help you fall asleep at night, pull out your insurance policy. You're going to see that the exclusion pages are longer and more in number than what is actually part of the coverage. You cannot buy insurance to cover everything. It's just not possible. So the quote on the bottom, I want the umbrella policy. Do you know what that is? Umbrella policy just means more of the same. So if you're buying professional liability coverage and you have a bucket of money of $1 million and you buy an umbrella for $4 million, that means you have $5 million altogether. But an umbrella requires underlying coverage. So the details matter when you are shopping for coverage and trying to figure out what coverage is best. And underwriters at carriers assume buyers don't give them the full story. Not lies, not being deceitful, but just don't think about what would be important. And so they price accordingly. They price for what they don't know. So when you are working with your agent, be very candid and explain your operations completely. Don't leave anything out. It could cause a denial of claim. if an insurance underwriter and the claims department said, well, we didn't know you were doing that, and that's what we intended to cover. Don't use your industry buzzwords or acronyms. The insurance industry is full of acronyms for every industry on the planet. Make sure your underwriter and your agent really understands what it is you do. More importantly, they need to know what you do not do. You are not the same as any other organization that might have a similar mission. More information makes an underwriter feel very secure about how a policy is priced. And in our office, we actually write a narrative, including your risk management steps and any special circumstances, and include the things that you do not do, because applications are yes and no. Ask your agent to tell your story, and often that will translate into the correct coverage, and more importantly for you from a financial standpoint, a more economical premium. So let's jump into the type of coverage that is out there. Directors and officers, sometimes that calls board insurance, and the board members have a right to be protected. What I've got here on the slide are the most common claims that fall under the directors and officers policy. The biggest one is misuse of funds. You took my money, I was a donor, I was a grantor, and you didn't use it in the way that you said you were going to use it, or you mismanaged those funds and wasted them, or potentially investment choices. And something that a lot of younger not-for-profits ask is, how quickly should I get directors and officers policy? They always think that's the first policy they need to have. What I would say to you is, until you have a fully seated board, you have bylaws in place, and you've got some money in the bank, there's really no point in purchasing directors and officers. Your liability policy may be more important. Employment practices, or EPLI, these are discrimination claims. Termination, failure to promote, favoritism, hostile work environment. And the board should want this in place even if there's only one part-time executive director and 1099s. Employment practice claims have skyrocketed since COVID. And a lot of that has to do with who was laid off, who was furloughed, who was brought back first, who's being allowed to work from home, who's required to come back. There's a lot of very contentious things going on, and the courts really haven't worked them out. The Department of Labor is changing how they are looking at some of these potential claim activities. So this is a very volatile area right now. If you do not have employment practices in place, you really need to do so. The other part of this is that 1099s under the Biden administration is changing dramatically. And so we may see an uptick in 1099s filing employment practice claims in the future. So property, well, we don't own anything. Well, you do, you have stuff, and your stuff just might be basic business equipment. You might have donor materials or brochures, promotional inventory, business checks, dedicated cell phones. Where is all this stuff? If you're not leasing an office and it's sitting in employees' homes and it's owned by your company, you may have some issues with coverage. Or if it's your personal stuff and it's in your car and you're in a car accident, or you have a loss of a fire at home, but it was business property, your personal renters or homeowners policy or auto policy may not cover that. So you really do need to check with your own personal insurance agent if there is a home-based business endorsement that can be added to your policy, because you do have stuff. All right, volunteers, they are your lifeblood. Carriers that specialize in not-for-profits have lots of endorsements available or automatically include volunteers in many, many areas, such as general liability, professional abuse, theft, auto, what have you. Where there's kind of a disconnect is going to be if a volunteer is physically injured. And interns, by the way, are not volunteers. If a volunteer is injured, many workers' compensation policies will not cover them. But you can buy an accident policy. If your volunteers are sitting at their house and they're working on a project for you, they're not traveling, they're not going to meetings, they're not doing anything, then you're probably in a good position. General liability. This is mostly an area that landlords love to ask about, and grantors want to make sure that you have general liability in place. These are boilerplate agreements that are out there, and depending on how you do your business, the pricing might be based on any one of these factors. Insurance is all about numbers. How much, how many, how frequent. So clients, members, mentees, square footage, revenue, sales fees, what type of activities are on site. This is just something that when you hear maybe the term, we need a certificate of insurance, 99 times out of 100, this is the coverage that they're looking for. And depending on who your carrier is, you may have an audit at the year end. For example, if your exposure for what it is that you're doing is based on fees, they may say, give us an estimate. And our estimate is we're going to do $500,000 worth of fee-based business this year. And at the end of the year, they may come back and say, well, how much did you actually do? If you did less than what you estimated, you will get a little bit of money back. If you did more than what you estimated, an audit premium will be owed. So really understand if your general liability policy is auditable. Professional liability. This is like malpractice coverage for what it is. What are you doing or what are you providing that could jeopardize the final outcome for your receiver? What are you managing? People, money, services. Are you international? Are you just in the United States? Are your interns covered? Are your 1099 contracted professionals covered? This is the area where that narrative that I mentioned early on is very, very important. Insurance carriers want to put you in a 4-digit or a 6-digit box. The narrative is what gets you out of that box and really gives the underwriter a very clear idea of what it is that you do. It's important so that the right professional liability product is attached to your policy, and it's important to make sure you're not being overcharged, and it's important to make sure as who is the insured, the definition of who this professional liability protects, the agency, the officers, the board, the employees, contractors, volunteers, interns. This is probably the most critical piece of coverage for GPP members to really understand in their policy. International. Most of the time, these are separate policies, and U.S. operations are really not extended. The coverage does not follow you outside the continental U.S., Hawaii, Alaska, potentially Puerto Rico and Canada. Every carrier's got a little bit of a quirk for it. But you can buy coverage for physical damage to client's property. If you're working on their property and do something to damage it, you can buy it for failure to deliver services, for general liability. You can also purchase coverage for employees, board members, volunteers traveling overseas and doing work on your behalf in a foreign country. That includes foreign workers' compensation and repatriation. It can include illness or injury coverage for volunteers when workers' compensation will not follow them. But these are very different by carrier. There are some general coverages that are available, but you have to be very careful reading what is included under injury and illness coverage when you're dealing on an international basis. Okay, workers' comp. Who must be covered? Every employee, unless you're self-employed and you're working from home and you are the owner. Many independent contractors. The 1099 test is going to be changing under the Biden administration. And so if you have an HR professional organization that you work with, they're your vendor, or if you're working with a payroll company that has an HR department, staying on top of this is going to be very important. And the reason is that there has been a lot of abuse for 1099s, paying them no benefits, no coverage, the tax issues, that kind of thing. And so the current administration is going to be changing who can be defined as an independent contractor. Your board of directors can be excluded if you wish. Volunteers. Most carriers do not provide workers' compensation coverage to volunteers. You can get it elsewhere, and there's a couple of different places that it can be, where those accidents or injuries can be covered, but it's really dependent upon what your volunteers are doing for you. There are accident policies out there, they're pretty cheap, a couple $100 to provide some limited coverage for your volunteers should they incur an injury. So for contractors, you are legally responsible to pay for their injuries sustained while they are doing work for you, unless they have their own work comp policy. I can pretty much guarantee most 1099s don't carry their own work comp. The exception would be an individual who is maybe working on a marketing project for you, or maybe working on a mailing to donors for you, if people even do mailings anymore, and they're working from their house. You're not telling them when to work, how they work, you've just given them a project. Payroll audits will come at the end of every work comp policy year, and you have to include your W-2 wages and your 1099s if those 1099s do not carry their own coverage or they're that potential exception. Work with your agent prior to the audit so that you know what kind of clear job descriptions and definitions for your 1099s need to be submitted to the carrier when they're doing your audit. And coverage is limited to the territory defined in the policy. That just means if your 1099 is working for you overseas, that's going to be go back to the international coverage versus the standard workers' compensation policy. Vehicles and drivers. Michelle, we don't have any cars. Doesn't matter. Every entity should carry this coverage, even when no vehicles are owned and even when you're not transporting people. And I've given you an example here on this slide. I'm a volunteer and I'm driving for XYZ not-for-profit. And I run a red light and I T-bone a van, maybe full of high school kids going to a meet. I damaged their vehicle. I hurt a lot of people. My personal insurance is going to go to address those damages first. But if my insurance is exhausted, my policy runs out of limit. A good attorney for the other driver and the parents of all those kids is going to say, Michelle, what were you doing when you caused that accident? Well, I was going to a meeting or delivering something for this XYZ not-for-profit. They're going to come after the not-for-profit to take care of the injuries that my insurance wouldn't take care of. So it's a very important coverage to have in place if you have volunteers or employees using their own cars on a regular basis. I'm not talking once or twice a year to go pick up the mail or a package. I'm talking about regular driving. All right, data and cyber liability. I actually do a full 30-minute presentation just on this, so you're only going to get the little chestnuts here today. This area of coverage has seen an enormous amount of claim activity since March of 2020. A lot of it has to do with employees working from home and moving remotely. Hacking is not the biggest threat. Many people remember the Nordstroms and the Home Depots and the banks and the big hospitals of the world getting their personal information of the people that they serve hacked. That's not what's happening right now. Human error is causing the biggest amount of problems, where people are working too fast, sending an email with an attachment with lots of confidential information to their entire address book, or dumpster diving. But what really is the biggest problem right now is clicking on links within emails that introduces a virus. Links that look legitimate from emails that look legitimate that are not. Ransomware, malware, phishing. These are the majority of the claims. They've increased well over 200% in the last 12 months. Some of it has to do with the fact that how employees are entering their email or their network system for their employer in an unsecured Wi-Fi or unsecured network from their home office. Your internal IT person or your IT vendor can only protect you so much. They usually can control what's coming in, and they put up the roadblocks to prevent what's coming in, but it cannot protect you from employees doing something inadvertent and entering a virus into your system and shutting you down. I work with an IT security consultant on a lot of educational pieces, and right now he's got 3 clients that have ransom demands or extortion, it's also called cyber extortion, for $50,000 or more, where they're not going to get the key to unlock their system from the bad person until they pay $50,000 in ransom. And cybersecurity coverage is available for that. So if you think that you don't need data breach, okay, how much money have you set aside to respond to a potential breach or a potential ransom demand? Do you have that on your balance sheet as a potential liability? What vendors have you identified today that you would call to handle computer forensics to figure out how something got introduced to your system, and more importantly, how to get it out? The legal notifications that are required by every state on notifying potential people that there is a breach, fines and legal issues. So my question to you is if you don't have data breach coverage and you don't think that you need it, what would be the first thing that you would do if you discovered that your computer system was being held hostage? Who would you call? Misconceptions about data breach and security. We're small. Nobody wants our stuff. No, you're small. That's why you're the target. Because a lot of the folks out there that are extorting businesses with ransomware and phishing schemes assume that smaller organizations don't have robust internet security. So they are targeting you. We use a payment processor for credit cards or payroll service. We don't have any exposure. The law says the liability comes down to who is the data owner, not the data processor. So if you're using ADP or Paylocity or Paychex for payroll, read your contract and find out what they are saying that they will cover if your employee's information is exposed. Our employees would never be fooled, never click on a link. That's just very naive thinking. People are working very hard and very fast, especially from home with distractions of COVID puppies and children working from home asking questions. It's very easy to click on something and it's too late. We have top-notch security. There's just no such thing. And security may be great at blocking what comes in, but again, simple employee actions can defeat an antivirus. Your IT contract with your outside IT vendor, when you read it, you will find out that they cover nothing. There is nothing that they will warrant or pay for should something happen to your system. So rookie mistakes in buying insurance. If you're new to the insurance process or have been blessed with that responsibility within your not-for-profit, signing a contract without reading the insurance section, very, very important. Oftentimes, if you can talk with your agent before you sign the contract, you may be able to reduce the limits required. Assuming nothing serious can happen, or being overwhelmed with everything else and tuning out when your agent talks, just waiting to hear what the price tag is. So embrace the boring. I get it. Insurance is dry, it's boring, it's tedious, but you need to pay attention a couple times, at least every other year. You really need to dial into it. Invest that time that you take with your agent to write that narrative, to get your full story and everything that you're doing well and doing right understood by the underwriter is going to pay off. So you need to be active in the insurance process. There are no dumb questions. Everybody says that, but in insurance it's particularly true. We have heard it all. We hear it all a lot. We hear it frequently. And then a story will come out on the news and a newscaster will use a term incorrectly. And then the questions will come in. Always ask. We've heard it. We're not going to think anything different by you asking that question. So getting ready for insurance, when you want to shop for the first time or you think it's time for a refresh, get your policies and procedures in writing if that's applicable. Are your contracts with your clients balanced? And what I mean by that is you're not promising the sun, moon, and stars, and you're going to pay for everything that could possibly go wrong. Are they balanced? Does it require the client to sign off on things along the way and agree to things? Are there checks and balances for financial transactions? Meaning one person isn't issuing the money, doing the bank reconciliation, and authorizing any exchanges. Do you have multiple people involved? Do you have liability waivers and agreement forms for your volunteers? Are you following current HR law? And right now that is a moving target. Do you have an employee code of conduct manual if that's appropriate for the size of your organization? My point here is it's not year, make, and model, shove it into Geico's software and 5 quotes spit out. That's just not the way it works with a not-for-profit. You're different, you're unique, and you need to spend some time getting your house in order to have the best outcome for your insurance. Some great resources are the Nonprofit Risk Management Center. You can sign up for their email blast. Their staff is phenomenal, has wonderful, wonderful articles. They also have books on volunteer management and just management overall, involving boards and directors and different kinds of exposure issues. So if you take nothing else away from today, I hope you take away, one, that there's some really good resources out there for not-for-profits, and number 2, embrace the boring. Get involved with your insurance, understand it, and it'll help you sleep better at night. Thank you for your time today. I will open it up for questions when April finds it appropriate. I think she's got some additional information she wants to share with you.
Michelle, thank you so much. That is a lot of material, a lot to understand. I also wanted to mention, so the Simmons Center for Global Chicago is a project of a fiscally sponsored project of the Global Philanthropy Partnership. And Michelle does the insurance for Global Philanthropy Partnership, which is a nonprofit organization. And she's just amazing to work with. So just full disclosure, we do have that relationship. But this is why I knew she would be great at being able to, lay this out for us and answer these questions. I do want to quickly share a couple of resources. So let's see. Okay, great. So Forefront, a lot of you will be familiar with, is the organization that supports nonprofits and funders throughout the state of Illinois. And they also suggest some similar nonprofits. You'll see they have the Nonprofit Risk Resource Library was one that they mentioned as well. And they also have their own best practices book, which can be downloaded from the Forefront library. They also mention a book called The Nonprofit Survival Guide by Jeff Alexander as a basic resource. And a couple more sites that they recommend as great places to check out when you're looking into insurance and legal obligations as a nonprofit. Where could you get into trouble? What do you need to know? What kind of health screening should you do for your legal and nonprofit area? So I am, and all of these links and slides, including Michelle's deck, will be shared. We'll put those up with the, so this video will be up on our YouTube page, and we'll have the resources up in the Simmons Center website so that everybody can access them and review them as well. So turning to Q&A, so Michelle, you had a list of, kind of things that a nonprofit organization ought to maybe start to get together before they talk to an agent. What if you're just not even ready? What's the very most basic thing? Like, if you don't have coverage, you don't have a prior policy, and you're just looking to get started, what kind of specific things should they be gathering? Is it a income statement, or just an initial phone call would just be kind of like, tell me what you do and how you do it, and then you would kind of take it from there. What should before talking with an agent, if they don't have prior coverage, what should they be pulling together?
Great question. really having a very clear story about what it is you do and what it is that you don't do. Insurance agents get a lot thrown at them every day from different clients who all have their own specialties and all have their own coverage nuance requirements. Start with what your contracts are. If you have a contract or you are entering into a contract for the first time, that's a really good place to start. Read it. Don't dump it off just on your attorney, because your attorney is going to be looking at it from a different perspective than an insurance agent's going to be looking at it. So maybe grab any type of agreements that you are considering, whether it be leasing space, it's from a grantor, if you get money from a government entity, I will guarantee you they have requirements on what kind of limits you can need to have, what kind of coverage you have to have. If an income statement is great, understanding what your payroll is, if you have payroll, having a timeline set up saying we are looking for a board and we're looking to have 5 members and we've got 3 seated right now. Just really having that information handy when you have your first phone call will be very helpful.
Great. So another question, you mentioned that interns are not volunteers. So how are interns covered? What if they're paid? Presumably they come up as employees, but if they're unpaid interns, how do they fall into the mix?
Well, first of all, that's a good question on a couple of fronts. I am not an HR law professional. I do know that the requirements for not paying interns is under intense scrutiny and has been for the last couple of years. So from a professional liability standpoint, if they are providing a professional service or they're engaging in professional services, carriers who specialize in not-for-profits will automatically include interns under the professional liability piece. Where you get into potential trouble is employment practice law claims, and that has to be defined. And again, I'm going to have your membership talk to an HR professional about how that works. With regards to workers' compensation, what they will do is say, if you have an intern on site working for you, they're going to use minimum wage times the number of hours to assign a payroll for workers' compensation premium.
Okay, great. And just as a reminder to our members, so we have our Simmons Center internship program. We're big proponents of paying your interns and paying them a decent living wage. So we have interns on staff that are paid through the Simmons Center for Global Chicago. They are covered by workers' comp. They are covered under our policies. So when you're asking for assistance through the Simmons Center and an intern is supporting you, please know that those individuals are fully covered and you don't have to, depending on what you're doing, I should say. So obviously everything is virtual right now. I think when we get back to in-person things, if our intern is actually visiting another office, then that starts to get a little bit more confusing. But at least from the Simmons Center point of view, our interns are covered for the work that they're doing on behalf of the Simmons Center. So another question, just to clarify, you mentioned that your first priority should be your liability and that the directors and officers insurance can wait. Just if you could elaborate on that a little bit more, how that plays out, because a lot of times I think organizations, the first question a prospective director asks is about the D&O coverage.
Right. So, well, if you've got a board that's seated and you've got money in the bank, sure, go ahead and get a directors and officers policy. But I'll give you an example. I'm working with a client right now in Indiana, and they are dispensing professional advice and referrals. And they are growing. They're going from 2 people sitting in a kitchen and coming up with an idea to a fully formed organization. They don't have a board right now. They're interviewing board members. They don't have their bylaws finished, but they are in process of providing a service. So to them, I said, we need to get your professional liability coverage in place. That comes secondary to a board that's not even set. So if you still have open seats, if you're building your board, I would say, but you are already engaging in activities, the liability should come before the D&O. Now, if potential board members are saying, I'm not going to do this until you've got D&O in place, okay, well, that's almost like a contractual requirement. But there is a lot of homeowners policies out there, Encompass and State Farm, that are two that I know of, that will include a small $10,000 coverage for a homeowner if they are a not-for-profit volunteer. So there is some peripheral stuff out there available, but if you've got no money and you don't have a board, what do you need D&O for? If you do have paid employees, you should get the employment practices piece though in place.
Okay, great. And then one final question. So the international piece, you talked about that, but what kinds of things should a not-for-profit that does have some international activities? I know that coverage is separate and is done sort of country by country, but what should they keep in mind when they're researching that or looking into issues around what their practices are internationally?
Okay, good question. That is going to be almost a complete, you have to almost think of yourself as a completely different company for any of your operations that are overseas. Are your employees and your volunteers going to be renting cars? Yes or no? So maybe auto liability is not an issue. In some countries, auto liability, and I don't mean to sound crass, but if you're in an accident, the local law enforcement comes up and looks at your car and says, well, that looks like about $1,000 worth of damage, and you look like you're $2,000. You give him $1,000, and we're done. It's other countries that are outside Europe are not as litigious as the United States. So you really need to kind of understand the culture of that country that you're in to determine what you need. To me, the biggest thing that you need to make sure that you're protecting is your employees and your volunteers, their health and their safety. That is first. So that's workers' compensation. That's an accident, travel, medical policies that are in place. If you are providing a product or service or you're managing things, then yes, then your professional liability comes into place there. That is a long conversation with your agent, and you need to be really clear on what it is your employees or your volunteers are doing, what services they're providing, and what countries they are going to. Now, there are some countries out there that insurance companies will not provide coverage for. If it's in a war-torn area or there's economic sanctions from the United States, carriers will not necessarily provide coverage for those particular countries. To the person who asked that, please reach out to me. I can maybe talk with you specifically if you've got some questions about that. But protecting your people is the most important thing when considering an international policy, how robust that policy is.
Oh, there we go. I think that's the end of our Q&A. So thank you so much, Michelle. Just want to thank everybody for joining us today. And we will again be posting this on our YouTube page, so you'll be able to reference it later. Thank you, Michelle, for your expertise and for your time. Thanks to our members, and we'll look forward to seeing you at the next event. So bye, everybody.